because there's not many companies that are making $500 million a day.
It's November 2024, and the world is buzzing about
artificial intelligence company OpenAI.
There's no revenue. There's not even a product right now.
And Nvidia, the GPU powerhouse, is one of the hottest stocks on the market. Yet, there's a company outperforming even Nvidia, and it's up 500% this year.
Well, you know, our business is always extracting insight from raw data. Over the last decade, the amount of data that people have accumulated is extraordinary.
Their new strategy is simple.
Bitcoin.
MicroStrategy is buying Bitcoin at unprecedented levels.
What do we expect? We expect it's going to go up 29% a year for the next 21 years.
How long can this upward momentum last?
It's just like gold, only it's virtual, it's digital.
So I went to DuPont. I said, I quit. I'm starting a company. I will build your global multi-user networked war game if you want me to. As a contractor, please give me money.
In 1989, 3 MIT graduates with a vision and $250,000 founded MicroStrategy in a small office space in Wilmington, Delaware. The trio's approach to data mining and business intelligence has set them apart in an industry dominated by giants like SAP, IBM, and Oracle. Early on, growth was steady, but in 1992, MicroStrategy landed its first major contract, a $10 million deal with McDonald's. This partnership boosted MicroStrategy's name in the tech world, though it was only the beginning. From 1992 to 1996, the company's revenue doubled each year. MicroStrategy was at the forefront of a tech revolution. In 1996, Michael Saylor was named Washington's High-Tech Entrepreneur of the Year. The following year, Ernst & Young honored him as Software Entrepreneur of the Year. The late 1990s saw a frenzy of investment in internet-related companies, with stock valuations soaring to unprecedented heights. On June 11, 1998, the company launched its initial public offering, releasing 4 million shares priced at $12 a share. The market's response was overwhelming. By the end of the first trading day, MicroStrategy's stock price had doubled. Its stock had reached a peak of $333 per share, valuing the company at nearly $25 billion. At this time, Michael Saylor's personal net worth had also skyrocketed. By early 2000, he was worth an estimated $7 billion. As the new millennium approached and the dot-com bubble was about to burst, MicroStrategy would soon face challenges that would test the mettle of Saylor and his team. On March 20, 2000, MicroStrategy's stock price plummeted a devastating 62% in a single day after it announced it would restate its financials for the past 2 years, sending shockwaves through the tech industry. In December of the same year, the Securities and Exchange Commission began investigating MicroStrategy's financial reporting. The SEC found that MicroStrategy had overstated its revenue for 1998 and 1999. The SEC charged MicroStrategy and its executives, including Saylor, with fraud for the inaccurate reporting of financial results. MicroStrategy's stock dropped even further to a low of $120 per share. For Michael Saylor, the personal cost was staggering. Once estimated at $7 billion, his net worth evaporated almost overnight. After months of deliberation, a resolution was finally reached. Saylor and other executives were fined $350,000 apiece, and the company had to pay a combined total of $10 million in disgorgement. Notably, while accepting these penalties, the executives did not admit wrongdoing. MicroStrategy found itself at a crossroads. A company that had once seemed unstoppable was now fighting for its very survival. Saylor's first move was a symbolic yet powerful gesture. He adopted a $1 salary, aligning his interests with those of the shareholders. Saylor emphasized the importance of learning from past mistakes, stating that the company would have to be more disciplined and focus on core business. This renewed focus meant doubling down on what MicroStrategy did best, providing cutting-edge tools to help businesses make informed decisions. MicroStrategy's financial performance showed signs of improvement. While the recovery was gradual, it was also sustainable, built on a foundation of improved products. By the end of 2019, they were sitting on a treasury of cash worth over $500 million. The year 2020 brought unforeseen challenges to the economy on a global scale.
China has identified the cause of the
mysterious new virus.
Coronavirus.
There are fears a rapidly spreading virus has reached Australia.
As the COVID-19 pandemic swept across the globe and government-imposed lockdowns took place, many central banks responded with massive stimulus. This flood of money raised concerns about inflation and the long-term value of fiat currencies.
If you actually back calculate, you come to a conclusion that the inflation rate was approximately 6.5% a year, every year, for 92 years.
He began to worry about the impact of these policies on MicroStrategy's cash reserves. With interest rates at rock bottom, the company's substantial cash holdings were effectively losing value over time. Saylor realized that merely holding cash was no longer a viable strategy for preserving wealth. This realization led Saylor to begin extensively researching alternative stores of value. He explored various options, from precious metals to real estate, but one asset class in particular caught his attention.
So Bitcoin represents cyber Manhattan. It's 21 million blocks. Everybody with money in the world is going to want to put some of their money there.
Saylor began rapidly immersing himself in the newfound interest. The more Saylor learned, the more convinced he became of the earning potential of Bitcoin. He saw it as a form of digital gold, a scarce asset that could serve as a hedge against inflation. In March of 2020, Saylor sent a memo to MicroStrategy employees criticizing the government's response to COVID-19. He argued that the economic measures would devalue cash reserves, further solidifying his belief in the need for an alternative strategy. During a quarterly earnings call in July of 2020, Saylor publicly announced MicroStrategy's intention to explore purchasing Bitcoin as a treasury reserve asset. In August of 2020, MicroStrategy made a significant financial move by purchasing over 21,000 Bitcoins for $250 million, marking Bitcoin as its main treasury reserve asset. The company continued its acquisitions, adding $175 million in September and $50 million in December, bringing its total Bitcoin holdings to over $1 billion. Saylor didn't stop there. On December 11, 2020, MicroStrategy issued $650 million in convertible senior notes, essentially bonds that allow investors to convert them into company shares if the stock price rises by a certain amount. These notes had a 0% interest rate, meaning if the stock didn't increase as expected, investors would only get back their initial investment, making it an interest-free loan for the company. Only 2 weeks later, MicroStrategy had acquired an additional 70,000 Bitcoin, totaling $1.1 billion. This comes down to an average price per coin of $15,964. At this point, MicroStrategy's stock price was essentially tied to the value of Bitcoin.
Everybody with money in the world is going to want to put some of their money there. Right? How much of their money? Well, if you lived in Lebanon or Iraq or Syria right now, the money you have in Bitcoin you still have, and the money you have in the local bank you don't have anymore.
The company could issue stock or borrow money from investors to buy Bitcoin, which would increase the value of Bitcoin, thus resulting in an increase in the value of MicroStrategy, which would allow them to amass even more money and, you guessed it, buy more Bitcoin. Critics compare this to a Ponzi scheme, where early investors benefit from new capital, whereas later investors would be at a disadvantage if this cycle were to collapse. As of December 2024, MicroStrategy holds over 400,000 Bitcoins, valued at $23 billion. The company's substantial Bitcoin holdings expose it to significant market risks. A sharp decline in Bitcoin's price could lead to devastating financial consequences. CFO Phong Le indicated that a drop to around $21,000 per coin could trigger a margin call, potentially forcing the company to sell some holdings or provide additional collateral for its loans. Michael Saylor suggests that companies with substantial cash reserves could adopt a similar strategy. With growing institutional interest in Bitcoin, MicroStrategy might be onto something. That is, given Bitcoin remains fairly stable. What do you think? Infinite money glitch or scam? If you enjoyed this video, please subscribe, and we'll see you in the next one.
So the very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the US government. catalyze the development of that world reserve capital network and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.